Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of when companies say one thing and the numbers say another. Today we are diving deep into ACUITY Incorporated's latest quarterly report, and boy does it have some interesting numbers. This is ACUITY Incorporated's quarterly report, also known as a 10Q. It gives us a peek under the hood at their financial performance from the 30th of November 2025 compared to earlier periods. Before we get too deep, if you love these kinds of breakdowns, make sure you hit that subscribe button and the notification bell. We also have a Discord community where we chat about these filings, and you can find the link in the description below, so join us there. Let us kick things off by looking at their balance sheet. This is like a snapshot of what the company owns and owes. At the end of November 2025, ACUITY Inc. had total assets worth about $4.65 billion. That is down slightly from August 2025, where it was around $4.75 billion. Now, what makes up these assets? A big chunk, over $1.4 billion, is goodwill. We will talk more about what this means later. Intangible assets, which are things like patents and brand value, also make up a significant portion, over $1 billion. On the flip side, their total liabilities were about $1.86 billion in November 2025. This means they owe more than they own, but when you account for their stockholders' equity, they are still in a solid position. Looking closer at their assets, current assets like cash and accounts receivable took a dip compared to August. Their cash on hand decreased by about $46 million, which is not surprising given some of the financial activities we will discuss. On the liability side, accounts payable also went down, which is generally a good sign for cash management. Long-term debt stood at around $797 million. This is a number to keep an eye on, especially when we look at how they are performing financially. Now let us move on to the income statement. This tells us how much money they made and what it cost them over a period of time. For the 3 months ending November 2025, ACUITY Inc. reported net sales of over $1.14 billion. That is a solid increase compared to the $951 million in the same period last year. This jump of over $192 million, or about 20%, is quite significant. Their gross profit, which is what is left after accounting for the cost of making their products, was $553.8 million. This is up from about $449 million last year. Importantly, their gross profit margin, that is the percentage of sales that turns into gross profit, actually improved slightly to 48.4% from 47.2%. This improvement is especially good because it shows they are not just selling more, but also making more on each sale. However, not everything is a win on the expense side. Their selling, distribution, and administrative expenses, or SDPI, went up significantly. In the recent quarter, it was $393.4 million, a jump of about $77 million, or nearly 25% from last year. The report mentions that this increase is mainly due to costs related to the QSC acquisition, which we will detail later. Despite the rise in SDAA, their operating profit still managed to grow. It came in at $160.4 million, up from $133.3 million in the prior year period. This represents a healthy 20% increase. The fact that they grew operating profit even with higher expenses is a testament to the strong sales growth. Now, where things get interesting is the interest expense. They reported an interest expense of $8.4 million in this latest quarter, a big change from earning $4 million in interest income last year. This shift is primarily because of the debt they took on for the QSC acquisition, and also because they probably have less cash sitting around earning interest, thanks to that big purchase. This led to income before taxes of $152.6 million in the recent quarter, up from about $134 million last year. The effective tax rate remained pretty stable at around 21%. And finally, their net income, the bottom line, was $120.5 million. This is an increase of almost $14 million, or about 13% compared to last year. This translates to diluted earnings per S-share, or EPs, of $3.82, up from $3.35 last year. That is a solid 14% increase in earnings per S-share, which is a key metric investors often watch. Let us break down how each of their two main business segments performed. ACUITY Brands Lighting, or ABL, saw its net sales increase by a modest 1% to $895 million. While sales grew slightly, their gross profit margin actually decreased a bit, mainly due to higher production costs. However, their operating profit for ABL did tick up thanks to lower selling and employee costs that helped offset the slightly lower gross profit. Now for the real star of the show, ACUITY Intelligent Spaces, or AIs. This segment saw a massive surge in net sales, soaring by over 250% to $257 million. The report clearly states this explosive growth is largely thanks to the acquisition of QSC. Their gross profit for AIs also jumped dramatically, and even their operating profit margin stayed strong. This segment is clearly driving a lot of the company's recent success. Speaking of QSC, let us talk about that acquisition. ACUITY Inc. bought QSC, a company that makes audio, video, and control solutions, for a hefty $1.2 billion in cash in January 2025. This was a huge move, expanding their AI segment into a more integrated technology platform. They funded this purchase with cash on hand and money from their term loan facility. The report shows that the acquisition successfully boosted AI sales and profits. It also brought over a significant amount of goodwill, over $394 million, to the AI segment, which represents the premium paid over the fair value of identifiable net assets acquired. This acquisition also added substantial intangible assets like developed technology and patents worth over $434 million. Customer relationships and trademarks also contributed significantly to this intangible asset pile. Now let us talk about that debt. ACUITY Inc. has a revolving credit facility of $600 million and also a term loan facility. They recently borrowed $600 million under this term loan for the QSC acquisition and have been paying it down as of the 30th of November 2025. They had $797 million in outstanding debt. This is a considerable amount, especially when you contrast it with their cash balance of about $376 million. While they seem to be managing their debt and were in compliance with all their loan agreements, it is a big number that contributes to their interest expenses. ACUITY Inc. also continues to pay dividends to its shareholders. They paid out $0.17 per S-share in the recent quarter, up from $0.15 per S-share last year. This shows a commitment to returning value to investors. They are also actively buying back their own stock, spending about $27 million in the latest quarter on repurchases. This is a common strategy to boost shareholder value when the company believes its stock is undervalued. The overall increase in net sales of 20.2% for the quarter is a strong indicator of market demand for their products and services, especially with the significant impact from the QSC acquisition on the AI segment. The improvement in gross profit margin to 48.4% is a positive sign, even with rising production costs affecting the ABL segment. It shows an ability to maintain profitability on increased sales. The fact that their operating profit margin remained steady at 14.0%, despite increased SDIA expenses, highlights good cost management in some areas, even as they invest more in growth and integration. The ABL segment, while showing modest sales growth, demonstrates resilience with an improvement in its operating profit margin. This suggests a focus on efficiency and profitability within their core lighting business. The AI segment, powered by the QSC acquisition, is now a major growth engine, showing a substantial increase in both net sales and operating profit. This strategic move appears to be paying off handsomely, positioning them strongly in the intelligent building solutions market. It is also worth noting that Karen J. Holcomb, their Senior Vice President and Chief Financial Officer, has put in place a trading plan for selling some of her stock. This is quite common for executives, but it is always something to note when leadership is adjusting their holdings. When we look at the risk factors, ACUITY Inc. does not seem to have experienced any material changes in their risks since their last annual report. This suggests that while risks exist, they are considered managed or consistent with previous assessments. ACUITY Incorporated is clearly in a growth phase, and the acquisition of QSC, while expensive, seems to be a transformative move that is already showing significant positive results in their AI segment. They are successfully integrating this new business and driving overall sales and profit growth, contributing to the overall stability of the company. While the debt was taken on for a strategic acquisition, it does mean a bigger chunk of their profits is going towards servicing that debt. Investors will want to see how quickly they can pay down that debt, or if the growth from QSC can more than offset the interest costs. While partially attributed to the QSC integration, a sustained rise here without corresponding revenue growth could put pressure on operating margins in the future. ACUITY Inc. is successfully expanding its technology offerings and strengthening its market position, particularly in the intelligent spaces arena. The company's strategy of investing in growth both organically and through acquisitions appears to be working. The key challenge will be managing the increased debt load and continuing to integrate new acquisitions effectively while maintaining profitability across all segments. Alright, that is our breakdown of ACUITY Incorporated's latest filing. What did you think of their performance, especially the impact of the QSC acquisition? Let me know your thoughts in the comments below. If you found this analysis helpful, please give it a thumbs up and subscribe for more deep dives. And don't forget to join our Discord community in the description to keep the conversation going. Thanks for watching, and I will see you in the next video.